Welcome. In this video, will ZBCN coin pump continue? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking back at the chart analysis shared with the audience in the previous videos, it is possible to see that the price is moving steadily along a certain ascending trend line. This trend line not only shows the direction of the price, but it can also be considered as a visual reflection of market psychology. In particular, the supportive power of this uptrend reveals that there is a strong structure where the price can make new attacks by creating a floor. In the recent price movements, it is noteworthy that this rising trend, which has been emphasized many times in the analysis, has been recontacted. The upward reaction of the price after this contact can be interpreted as a clear indication that this trend is still valid. One of the most important elements that traders should carefully follow is the price's commitment to this rising support line, because such trend lines are the backbone of technical analysis. So as long as the price remains above this structure, bullish expectations remain technically supported. The reaction after the last contact shows that this trend line is still being taken seriously by investors and is still guiding pricing. This is a strong signal, especially for short-term traders, because technically, price movements close to the support line are usually considered as buying opportunities. Looking at the current structure of the market, maintaining the uptrend is of strategic importance. If the price continues to move without breaking this structure, this may paint a positive picture not only for short-term, but also for medium and long-term investors. Because as long as the trend line is not broken below, there is no structural breakdown in the market. Therefore, every contact above this line and the subsequent upward reactions confirm that the market still has a healthy and strong structure. When recent price action is analyzed, the adherence to this trend line is clearly evident. This is one of the most powerful indicators on the charts, especially when investor psychology is combined with technical analysis. The fact that the price bounced off this trend line shows that buyers are active in the market at these levels, and that the support zone is working. At the same time, this also shows that confidence in the market remains and investors are maintaining their bullish expectations. Such structures are of great importance for investors. This is because trend maintenance means that confidence, interest, and potential are still alive in the market. Such rising trend lines also work as dynamic support levels. This means that as the line slopes upwards over time, the price naturally starts to find support at higher levels over time. This indicates both that the price is steadily appreciating and that the market structure is in a healthy bullish phase. Of course, the most important thing to note here is that this trend line should not be broken. As long as the price stays above this line, there is a strong possibility that the upward movement will continue and higher highs will be tested. However, if there are closes below this line, then we can talk about a weakening or an end to the uptrend. However, it is too early to talk about such a risk in the current outlook, because in the current situation, the price has only touched this trend line and reacted quite positively. This reveals that the market is still in an upward expectation and technical structures are actively working. At this stage, the healthiest approach that investors can take is to continue to follow this rising trend line closely and keep positive scenarios in the foreground as long as the price stays above this structure. Because in technical analysis, there is no change in direction unless the trends are broken. But we cannot decide the analysis only with trends. Let's look at other metrics. Keep watching. Looking at the chart in general, it is clear that the price movements have been trying to form a certain structure recently. This structure resembles the bowl pattern, which is a very common and powerful pattern in technical analysis. That is, the price gradually declines from a level where it has peaked in the past, forming a certain floor, and then rebounds and starts moving back towards the starting point. The formation of such a pattern is usually considered a sign of stabilization in the market structure, restoration of supply-demand relationships, and a strong desire for a rebound. At the moment, the price seems to be trying to form this bowl structure, and if it is successfully completed, it will result in a very positive technical outlook from a graphical point of view. Dish patterns especially indicate that medium and long-term bullish expectations may be strengthened. This is because this pattern indicates that the price consolidated over a period of time and came out of this process by gathering strength. This is a sign that investors are showing interest in the market again and that the price has upside potential. In the case of the completion of the bowl, the target level is usually expected to be as high as the depth of the bowl. That is, the distance from the bottom to the top defines the potential target that the price can reach after the pattern is completed. This is a very common approach in technical analysis and is taken into account by many traders. In this context, the price is currently experiencing the second half of this bull structure. That is the phase of recovery and approaching the resistance zone. It's natural for the price to experience some volatility and perhaps some small pullbacks during this process. However, as long as the overall trend remains upwards, the pattern is likely to complete successfully. The critical level for the completion of the pattern is usually the peak at the beginning of the bull. This point also serves as a psychological resistance level. If the price reaches and breaks this level, the pattern is technically confirmed. This is usually followed by a harder and faster rise in the price, usually accompanied by an increase in volume. Therefore, in the current outlook, the fact that the price is trying to form this pattern is something to watch carefully. In addition, the formation of these patterns is also important in terms of investor psychology, because the bottom of the bull pattern usually forms during periods of panic, fear, and hopelessness in the market. However, over time, this negative atmosphere dissipates, confidence returns to the market, and buyers start to move the price up. The price structure formed at this stage forms the right side of the bull, and once this structure is complete, investors now wait for the price to make an upward breakout. At this point, if the price reaches and stays strong until the top of the dish, it increases the expectations that the pattern will be completed. If the price breaks through this level, most technical analysts and traders consider this a buy signal, which could cause the price to rise faster. Volume is also very important at this stage, because an increase in volume during the breakout of the pattern is considered an indication that the breakout is healthy and strong. If the volume remains low, the breakout is considered to be fake. However, a high volume breakout can help to reach the targeted areas faster. To summarize, the current movement of the price has a strong potential to form a dish pattern. Such patterns provide traders with important clues both technically and psychologically. The completion of the bull is not only the formation of a graphical structure, but also an important signal that the market is rebounding and buyers are starting to take control. Therefore, if the price continues to move towards the completion of this structure, it is possible that a significant bullish wave may begin in the coming period. Looking at the chart, it is clear how strong an influence the 200-day exponential moving average has on price action. In technical analysis, the 200 EMA is considered an important indicator that traders follow carefully. This average is a critical tool, especially when it comes to determining the long-term trend direction, and whether the price settles above or below this level is crucial to understanding the overall trend in the market. A look at the recent price action shows that the price managed to break above this important level and made a remarkable rally following this move. This indicates that a positive momentum is building in the market and the buy side is taking control. A break above the 200 EMA is considered a very positive technical development. This is because such breakouts usually signal a market reversal or the beginning of a new uptrend. In this context, the fact that the price rises above this average and tries to stay there increases the confidence of investors and paves the way for new purchases. Especially in the strategies of large investors and institutional players, the 200 EMA levels are one of the frequently referenced regions. Therefore, staying above this level may cause them to enter the market more strongly. 200 EMA is for long-term trends.